Welcome back to Stocklabs for another market recap. We just finished the month of September on the 30th, which also brought the end of the quarter. And it was another kind of soft week for markets. We were trying to engineer a little bit of a rally into midweek, but I forget what it was on Thursday. I think we got kind of better than expected claims numbers, which sort of um, reinforced the hawkish Fed sort of narrative, and we sold off on Thursday, and then kind of just followed through on Friday into the weekend. There wasn't really much appetite to take anything on. Having been battered around for the last several weeks into the weekend. As for the major indices, I don't think anything really stuck out too bad. Okay, the Nasdaq was down 3%. That's kind of like a standard down week. This year. S&P was down 2.9, Dow was down 2.8, and the Russell outperformed down 1.4%. Bonds got hit hard again, down 3%. Gold kind of got a little bit of a bid for the week, first time in a while. And crude oil was flat. Now there's a lot of action in the crude markets coming up because Saudis are talking about cutting production. The White House is going to be winding down its SPR sales in the next few weeks. And so there's going to be a lot of people positioning in the crude market over the next week, 2-3 weeks. So this should have like some pretty big swings going back and forth. As for our leadership stocks, they kind of just sagged with the market overall, which is kind of expected. Outperformer was Netflix, up 4%. And actually, Netflix is still way off of its lows that it had early this year. I think it bottomed out around I can't remember, 160 or 70, somewhere in there. And up at 235 and having a positive week when the Nasdaq got hit by 3% or whatever it was is pretty good. Apple finally gave way, down 8% for the week. It's a bad week. They've got some there's been some talk that the iPhone demand is not great. We see these sort of headlines pop up a lot of times. Usually they don't end up mattering, but that's in more of a bull tape. This is kind of like there's no room for error right now. So, that hit Apple pretty hard. Tesla, okay, the rest are kind of in line with the overall market. Amazon basically flat, another, I guess, outperformer. But Tesla, Facebook, Nvidia, Google, all down about the same as the Nasdaq. From a breadth perspective, actually, we kind of were hugging the flat line on most industries, with the exception of utilities getting demolished. With rates kind of on the march, utilities are not going to be catching any flows from money managers. But the rest, okay, on a median basis, all of these industries beat the indices. With the exception of consumer, that was kind of the same as the market. Basic materials were up a little bit. Healthcare slightly up. Median tech stock down 1% versus the Nasdaq down 3%. Nasdaq's obviously cap weighted. Subsectors that were up the most: gold and silver up 7, 8, 9%. We've got some oil and gas subsectors in here, but overall only 4 sectors up 5%. On the downside, we've got 14 sectors down 5%. So yeah, slightly imbalanced to the sell side overall on subsectors, but not anything too crazy, especially when you consider the indices had a solid down week. You would think there would be a little more follow through, with subsectors leading on the downside. But as you can see, the breadth overall kind of held up, even though the indices didn't, which you start to see this sort of action maybe around, bottoming phases, trying to play themselves out. It gets very chaotic. Breadth from a market cap perspective was maybe a little different. We'll see. 1 to 5 billion. Okay, down 6/10, 7/10. More or less a good week for them. 5 to 10 billion. Down 1.3%. 10 to 50 billion. Okay, that can't be right. What is Hippo? Hippo split. So we'll get this out of here. Down 1.9% for large caps. Mega caps were down 2.3%. So again, outperforming the indices. And Terra caps down 2.7%. Again, outperforming, S&P, QQQ. So, okay, breadth was negative, but better than, it held up better than the S&P or the Nasdaq or Dow or whatever. IWM was down 1.4%. Kind of the overall market was more in line with that than the big cap weighted indices. So, between sectors and market caps, the breadth was actually, you're not going to ever say it was good with these kind of numbers, but it was kind of more encouraging than what you'd expect to find, having seen the performance over the last week. For this coming week, okay, what do we have for intelligence? Ultra short real estate, ultra oil and gas, so bullish oil and gas, biotech bearish, and natural gas bullish. The rest of these are kind of okay. Gold miners goes with kind of we said gold was an outperformer, and actually Stocklabs wants to press the gold trade a little bit. Robotics, I don't know what this Goldman ETF is, and okay, services, whatever. Nothing too exciting on here, but we'll see about the downside. Okay, whatever this is, total return fund, supposed to do bad this week, but I don't know what it is. Something floating rates, also don't know what this is. Okay, bearish energy is bearish, so bullish energy. Ultra short Qs is bearish. The Q is bearish Qs, which means we're bullish the Qs this week. And I don't know what this is. John Hancock something. Okay, crypto bearish as always. There's a lot of sort of I'm noticing a lot of sort of, I don't know if they're fixed income ETFs or whatever that are showing up on all these scans, but you don't usually see that very often. And the rest of these I will just ignore. Okay, Labu also bearish, which goes hand in hand with the biotech trade being bearish. But anyway, we still have sort of our active oversold signal from Friday before last. Overall, the Nasdaq being down 300 points for the week, 3% is okay in this tape. I'm still sort of looking for a swing low to be getting put in, like right around here. Early in the week, probably this week, we'll get something and then start a bit of a squeeze and short covering rally. So that's how I would play it. The breadth numbers were encouraging, were a little more encouraging this week. After the really big flush the week prior, sort of held up a little better and trying to hammer out a low here, even though the indices made new year-to-date lows, new 52-week lows, I think, and the quarter basically closed as a disaster. So, we're into October now, and we'll have to see if we can sort of engineer some sort of bounce starting this week, hopefully. Thanks for tuning in. That's all from me, and talk to you next week. Bye.